my name's Rachel and welcome back to the channel. So in today's video, I am going to be covering my SIPP portfolio, which stands for my self-invested personal pension. Perhaps like me, you have old workplace pensions that you have recently put into a self-invested personal pension, or potentially you are self-employed and have a SIPP. So in this video, I'm going to give you a full percentage breakdown of every single holding that I have in my self-invested personal pension. I'll also talk to you about performance. As a whole, the 5-year annualized returns for this portfolio are 16.76% at the moment. So that means that on average, over the last 5 years, every year it has achieved 16.76% on average. Obviously, over those 5 years, it has gone up and down, but on average, it has achieved 16.76. So I am very pleased with the portfolio that I have at the moment. I'll be going through it in greater detail, but to give you an overview, I hold mainly ETFs. So this portfolio I have recently rebalanced to make sure that I hold between 60 to 70% ETFs in this portfolio, which stands for exchange traded funds. For me, they are very simple investments, they're very low cost, and I wanted to hold predominantly ETFs as the core of my portfolio. And then I also hold a smaller amount of actively managed funds in this portfolio, which obviously contain different individual stocks and shares, but I do not hold any individual stocks and shares in this portfolio. They are all held as funds or ETFs. So last week I did a video which explained that I was doing some rebalancing of the self-invested personal pension and making some changes. Those changes have all been fully made now. So the self-invested personal pension portfolio that I'm going to share with you today is going to be the portfolio that I plan on holding for the next couple of years, when I might again do a little bit of rebalancing and make some changes then. But these are all long-term investments and all investments that I want to hold on to. Okay, so I am just logging in now to my AJ Bell app. I have my self-invested personal pension with AJ Bell. I did a video actually comparing different providers of self-invested personal pensions, and AJ Bell for me personally worked out as the most cost effective. If you want to check out the video where I compare SIPP providers, you can, because there might be a different option that is better for you, but for me personally, AJ Bell was the best option. So on the AJ Bell app, they have something called a portfolio X-ray, where they take all of your different investments and they put them together so that you can have a look at your portfolio as a whole, which is what I'm going to be sharing with you today. So it gives a really clear picture of all of the different underlying assets and the portfolio breakdown as well. So it's really, really helpful. It also gives you a breakdown of the different countries that you're invested in and will work out the performance of your portfolio. So this is where I have got that 16.76% 5-year annualized returns from this report. So it makes it nice and simple to regularly review your portfolio. So first of all, I wanted to share all of my holdings with you. So I have recently taken the self-invested personal pension down to 7 different holdings. So I did used to have much more, but I realized that there was some crossover with those investments. So some of them might have contained a lot of the same assets within them, and I wanted to keep this portfolio nice and simple, so I've reduced right down to 7 holdings. So I'm going to go through them with you now, all the way from the largest holding all the way through to the smallest holding, so you get a nice picture of my portfolio. So first of all, the first holding I have is the iShares MSCI USA SRI ETF. So the code for that is SUUS if you're interested. I have a separate video all about this ETF. If you want to check it out, I will link it here. So this makes up 25% of this portfolio at the moment, and this is the investment that I have been adding to on a monthly basis. So my second biggest holding is the iShares S&P 500 information technology sector. So this is not an S&P 500 ETF, it is the information technology stocks from the S&P 500. So rather than holding all of the 500 stocks in the S&P 500, I'm simply holding the information technology ones when I invest in this ETF. So this ETF makes up 19.69% of my portfolio, so almost 20%. 20% of my portfolio. And the code for this one is IITU. So moving on now to my third largest holding in the self-invested personal pension, I wanted to invest in a world ETF, and the one that I have chosen is the Vanguard FTSE Developed World excluding UK ETF. This makes up 18.64% of my portfolio at present. So again, almost 20%. I wanted to have a world ETF in this portfolio, so this is the one that I've chosen. I am aware that there will be some crossover with the investments in the other ETFs, but I wanted to have an ETF in this portfolio that represented the world, and for me this was the best selection. Moving on now to holding number 4. This is where we move into some actively managed funds rather than passively managed funds or ETFs. So the largest holding that I have of an actively managed fund is the Baillie Gifford Positive Change Fund. As I said, I wanted this portfolio to be predominantly ETFs and passively managed funds rather than actively managed funds. However, this is an ETF that I've held for some time now in my self-invested personal pension, and it has performed very well. In the future, potentially I'll move this portfolio completely over to ETFs, but at the moment this Baillie Gifford Positive Change makes up 15.45% of my self-invested personal pension. My next holding makes up 8.31% of this portfolio, and it is the Scottish Mortgage Investment Trust. Now this has performed particularly poorly in the last couple of years. However, previously to that it had phenomenal performance. I have been holding this for some time. As I said, this is an actively managed trust. So yeah, please do go away and do all of your own research before making any investments for yourself. This is a particularly volatile investment. The Scottish Mortgage Trust has a very high standard deviation of 23.91. So yeah, please do your own research before investing, particularly if some of the investments are particularly volatile like this one. And then the 6th holding that I have is the Pacific Horizon Investment Trust. This makes up 7.82% of my portfolio and gives me exposure to the Pacific region. Again, this is another actively managed fund, and as I said, as a minimum I want 60 to 70% of my portfolio to be passively managed. So over time I might decide to change this into an ETF or an index fund, but at the moment I am continuing to hold it. And then the 7th investment that I have, my final investment, is another ETF. It is a thematic ETF. So thematic ETFs do tend to have slightly higher fees. They focus on a specific theme rather than, say, for example, a region. And this ETF is the L&G Battery Value Chain ETF. So the investment objective of this fund is to provide exposure to companies that produce metals that are primarily used for manufacturing batteries. So this is a very unique ETF, but it is one that I decided to invest in, and this makes up 4.34% of my portfolio. Then I have a very small amount of cash in this portfolio, and that is simply to cover any fees. And then obviously every month cash goes into this portfolio and I decide where to invest it. As I said, I have been topping up the biggest holding in this portfolio, which is SUUS, on a monthly basis. And I do try to keep the cash in this portfolio to a bare minimum because I would rather be invested in the market than be holding large amounts of cash. You might question why I don't have any bonds in this portfolio, and this is simply because I feel that I am a long way from retirement. I am obviously getting older. By the time I'm able to take any money out from this self-invested personal pension, I will be 57. So as you get closer to retirement, you may be advised to have a portfolio that has a larger percentage in bonds or in cash as you get closer to drawdown, but I feel that I am quite some way away from that at the moment. So at present I do not have any investments in bonds, and I hold as little cash in the self-invested personal pension as I possibly can. So those are my 7 holdings within the self-invested personal pension. As I said, over the coming years I may review those actively managed funds and potentially move over to ETFs, because ETFs do have such low costs, and historically they do tend to outperform actively managed funds. However, I am interested to see how these actively managed funds that I hold do perform over the coming years, so I have made the decision to hold on to them. So as I said, everything that I'm holding in this portfolio is an ETF or an actively managed fund. So those are baskets of different stocks and shares. So if you want to have a little dig deeper into all of the individual stocks and shares that form the largest part of this portfolio, then you can do this on this portfolio X-ray. So it will obviously take all of those funds and ETFs together and then figure out from there what your largest holdings are. So I'm just going to read you very quickly the top 10 holdings that I have in this portfolio, but as I said, they are all in ETFs or funds. I do not hold any stocks and shares individually in this portfolio. So it will come as no surprise that a lot of these are tech stocks. So we have Microsoft, Apple, Nvidia, Tesla, AMSL Holdings, Mercado Libre, Adobe, the Home Depot, Broadcom Inc., and Taiwan Semiconductor Manufacturing Company. So those are my top 10 holdings. And then to give you an idea of the breakdown in terms of regions and countries, as expected, a large proportion of this portfolio is made up of the US stock market, so 70.6% is US stock market. Then moving on to China, which makes up 3.44%, India 2.87%, Japan 2.58%, the Netherlands 2.53%, the Republic of Korea 2.28%, Brazil 2.15%, Canada 1.85%, Taiwan 1.75%, and Germany 1.6%. So that is the breakdown of my portfolio. I wanted to make sure that I did, as I said, have a world ETF in this portfolio, and that I had exposure to different areas of the market. I didn't want to focus on simply investing in the US markets. So it's a nice diverse portfolio. As I said, there is that focus on tech. As you can see from those top 10 holdings, there is a lot of tech in this portfolio. It actually makes up 39% of this portfolio. However, there are other sectors obviously included in this portfolio, including financial services, real estate, communication services, energy, industrials, healthcare, and utilities stocks as well. So it's not just a tech portfolio, but obviously it is very, very tech heavy. So this is how my self-invested personal pension is looking at the moment. If you'd like to check out a video on where I decide which self-invested personal pension provider to go with, then I will link that here for you. It might give you a little bit of insight into why I decided to go with AJ Bell, and give you some options for different providers if you are looking to open up a self-invested personal pension for yourself. I personally have really enjoyed being able to really take control of my finances and make the investing decisions for myself when it comes to my pension, and to get a real picture on where I could be when I come to retire. And also what I've really enjoyed is the low fees of having a self-invested personal pension, rather than having a pension provider that are charging much, much higher fees to manage it for me. Anyway, I hope you found this video really interesting. Any questions, as always, pop them in the comments down below, and I look forward to seeing you for the next video. Bye bye.